You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Monday, May 6th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Monday. The first thing to know is Trump threatens to raise tariffs on China. U.S. President Donald Trump increased pressure on China over the weekend, threatening to raise a 10% tariff on $200 billion in goods to 25% on Friday, adding that an additional $325 billion in goods could potentially be subject to tax. The trade deal with China continues, but too slowly, as they attempt to negotiate. No, Trump tweeted on Sunday. That threat comes ahead of a high-level negotiation in Washington this week. Although the Wall Street initially reported that China was considering canceling Vice Premier Liu He's trip, a spokesperson from the Chinese Foreign Ministry confirmed that it was still planning to send a delegation. There was, however, a lack of clarity over whether the Vice Premier himself would still make the trip. Trump has twice extended the previously announced tariff increase since reaching a trade truce with Chinese President Xi Jinping on December 1st, and some analysts speculated that Sunday's threat is a tactic to increase pressure ahead of the next round of talks, due to start Wednesday. The second thing to know today is the Dow was earlier set for a 500-point slide on trade angst. Trump's tweet ignited a risk-off move in financial markets on Monday, with global equities down across the board. The Pan-European Euro Stoxx 50 slid 2.1%, while China's Shanghai Composite ended 5.6% lower. Japan's Nikkei 225 remained closed for a holiday. U.S. futures pointing to a sharp decline at Monday's open earlier today, after ending on a high note last week, thanks to a solid labor report that showed little sign of increasing inflationary pressures. In a session with no major U.S. economic reports, the greenback was little changed against a basket of major rival currencies. However, the Chinese yuan dropped against the dollar, while the Japanese yen received safe haven bids. The third thing to know today is oil prices tumble on trade tensions. Oil prices sank on Monday as Trump's tweets revived fears for the global economy and oil demand. U.S. crude oil futures fell 97 cents earlier, or 1.6%, to $60.97 at 5:27 a.m. Eastern, while Brent oil traded down 87 cents, or 1.2%, to $69.98. Traders fear that a full-blown trade war between the world's two largest economies would cripple demand for oil. prices had fallen last week after a surge in U.S. stockpiles, suggesting that global supplies are still abundant. Amid ongoing sanctions against Iranian oil, the U.S. announced Sunday that it was sending an aircraft carrier strike and bombers to the Middle East because of troubling and escalatory indications and warnings related to the Islamic Republic. Such moves often lead traders to build a geopolitical risk premium into crude prices, but that appears to be outweighed by trade-related concerns today. The fourth thing to note today is Occidental sweetens offer for Anadarko. Occidental Petroleum upped the cash component of its $38 billion offer to acquire Anadarko Petroleum, while removing a requirement for its own shareholders to vote on its bid. Occidental restructured its $76 per share offer to be 78% cash and 22% stock, compared to the previous 50-50 split. Apart from making the offer more attractive to Anadarko's shareholders by reducing the risk associated with holding Occidental stock, the move lessens the number of shares that Occidental needs to sell to fund the transaction, removing the need for shareholder approval to launch the bid. Anadarko responded by noting that previous agreement to be acquired by Chevron for $33 billion was still in effect, and it continued to recommend that bid, although it was reviewing the new proposal. And the fifth thing to note today is Berkshire ups share repurchases as Buffett spotlights Jane and Abel. Billionaire investor Warren Buffett's Berkshire Hathaway repurchased around $1.7 billion of its own shares in the first quarter, a sharp increase from 2018 total buybacks of $1.3 billion after the company relaxed its policy last year. Buffett, known as the Sage of Omaha for his successful investment track record, used Saturday's 2019 annual shareholder meeting to place the spotlight on his potential successors, Ajit Jain, Vice President of the investment firm's insurance operations, and Greg Abel, Vice Chairman of non-insurance operations. Buffett allowed both men to take the floor at the meeting and suggested that permitting Jain and Abel to answer more questions in the future was probably a good idea. Our second story today is also from investing.com. Fed's Harker says downward trend in inflation could be transitory. Some recent weakness in the U.S. inflation could be transitory, suggesting no reason to adjust monetary policy at this point, one top Federal Reserve policymaker said on Monday. Patrick Harker, president of the Federal Reserve Bank of Philadelphia, said he is keeping his medium-range inflation and near-term growth forecasts unchanged, giving further support to a statement on inflation last week by Fed Chairman Jeremy Powell that took markets by surprise. If any component of the outlook were to affect my view on the appropriate path of monetary policy, it would be inflation, Harker said in remarks prepared for delivery at a monetary and trade conference in Philadelphia. However, we're not there yet, and it would take more data to convince me. I therefore continue to see one increase at most this year, possibly one at most next year. And that, ladies and gentlemen, is news you can use for today, Monday, May 6th, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free one-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.